crypto's the big journey. Obviously, the whole finance thing is right. It's big. It's all part of the same thing. But this opportunity of a $2.5 trillion asset class going to $100 trillion is the largest, fastest accumulation of wealth in all human history. Even if I'm a total moron, wrong by 50%, it's still larger than the entire market cap of the S&P that took 100 years to build in value. And it's going to happen within probably 8 years. And so I don't want people to come to me and say, why didn't we participate? They succeeded and we didn't. I'm like, here it is. Here's the first global, homogenous asset that is fractionizable, that everybody can put 10% of their earnings in. It's the gift you've all been waiting for. So this is the one.
Wait a minute, everyone. We all agree that the crypto market never sleeps, but with countless newsletters out there, how do you choose the best one for you? BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. In today's video, Raoul Pal discusses macro, crypto, wine, price predictions, the banana zone, when crypto goes parabolic, the exponential age, culture, and general mayhem.
Liquidity cycle is actually somewhat mid-curve, meaning it's a over-explanation for a simple thing. Simple thing is all you need to know is number go up. The whole system is set for number go up. So therefore, just be involved in that number go up and own the asset that goes up the most. It's that simple, right? The whole system is set for number go up. That's what debasement of currency does. When you have an over-indebted system, the collateral of the system, the assets, can't go down, because if not, you've got too much debt versus the assets, and that's what happened in 2008. So the whole system is based on that. The baby boomers are all going into retirement. You can't let the assets go down, because if not, they've got all the wealth. So therefore, consumption will collapse. The number can't go down. So as opposed to number go up, you could say the number can't go down. So the liquidity cycle is just an element of that. It's the actual mechanism by which it happens. If you're 30, you shouldn't give a shit about that cycle. You should just use any weakness to keep buying more number go up assets. For others, it then becomes a cycle to try to take some risk off the table, because it's a volatile space, particularly in crypto or technology investing. Both work well. But then you come to the question is, and most people get to this, is everyone thinks, yeah, I'm going to take money off. And then you're like, and where am I going to put it? Because as soon as I take it off, debasement is happening again. So you might put it in stable coins for a bit. Sure, definitely cash in lifestyle chips, buy that house, do that thing that you want. But after that, it's difficult to think about getting out. The reason Jeff Bezos is the richest man in the world is because he didn't sell his Amazon equity. Right? People forget that compounding returns. Bitcoin since 2012 is up 22 million%. It's 140% a year. In that is 4 down 85% bear markets. And it's still that. Solana was down 97.5% last cycle, or 98.5%, sorry. It is still compounding at 240% returns a year.
A cascading long squeeze of Bitcoin could explain the asset's recent drop to 53-day lows as miners continue to sell, according to a Bitcoin analyst. Speculators kept adding to new long positions, just adding more fuel for more liquidations in a cascading long squeeze. Pseudonymous Bitcoin analyst Willy Woo wrote in a June 24 X post. A long squeeze happens when a large number of long position investors, those betting on a rise in Bitcoin's price, start selling their holdings as the price falls to cut their losses. This causes the price to drop even more, leading to a cascading effect on other long position holders. The opposite is referred to as a short squeeze. This term became well known when retail traders pumped up the price of GameStop stocks in January 2021, forcing large short investors to buy back the stock at a higher price to limit their losses, and thus pushing the stock price up to meteoric heights. According to CoinGlass data, a dip below $60,000, similar to June 24 when Bitcoin fell below $59,000, would wipe $1.16 billion in long positions. However, at a similar 3.73% upward swing would erase $2.18 billion in short positions, showing that traders are currently more confident in the price going downward. Worth a breakdown of what's happening given the fear in the market, Wu added. It comes as the Crypto Fear and Greed Index, which measures market sentiment for Bitcoin and the broader cryptocurrency market, tanked to its lowest score in nearly 18 months. Wu also pointed out the ongoing post-halving miners' capitulation event, which is a theory that miners will turn off their hardware and sell their coins if Bitcoin falls below a certain price and mining becomes unprofitable. Superimposed on this liquidation squeeze, we have a post-halving miners' capitulation, said Wu, explaining that miners selling Bitcoin could pay for needed upgrades, while the weakest miners are closing shop and being liquidated. On June 24, Bitcoin saw its biggest daily decline in over 3 months, dropping 6.26% to $58,890, according to pseudonymous crypto commentator Bitcoin Archive. The biggest daily discount in price for 97 days, it wrote on June 24. Gen 3 CEO Samson Moe believes the Bitcoin dip is purely sentiment and fear-driven, not from selling off large holdings.
Everything is easier when you're riding a secular trend. Why was my career successful? I rode 2 trends. One was the rise of the derivative market. Gigantic. It's a $1.4 quadrillion market now. That was one. The other was the rise of hedge funds. So at the biggest customer base and the biggest product, you can't help but make money. That's a secular trend. You want to be in places with a secular, you want to live in a country where the economy is growing on a secular basis. So one of the reasons why Spain is difficult to live in, most of Europe is like a museum now. It's beautiful, but it's not a place to be an entrepreneur because the economy is not growing. Same with Japan. And China's gone kind of ex-growth. India's the fastest growing economy, the Middle East. But there's 2 trends that are easily investable that are in a secular trend. Every day, and it's all the same trend, every day is more digital than the previous day. It's as simple as that. And therefore, this whole trend of digitalization of everything, including human intellect, including human labor, that's robots and AI, including money, everything is going to outperform. So just ride that trend and don't overthink it. I see so many people wanting to trade commodities here and this cycle there, and I'm like, you're wasting your time. You don't need to do all of that stuff. I've been guilty of all of that stuff, but I've realized that you don't need to do any of it.
Popular trader Don Crypto Trades also believes the selling from mid-Gox repayment will have a significant impact on the BTC price. More selling pressure seems to be coming from the German government, whose wallet moved nearly 6,500 BTC on June 19, according to Arkham Intelligence. Since February 2024, the wallet has held nearly 50,000 BTC, which is worth over $3 billion at current rates. BTC's price decline on June 24 follows days of outflows from the US-based spot Bitcoin ETF. Notably, these investment vehicles have witnessed nearly $1.12 billion in withdrawals over the last 14 days. The latest estimates from CME Group's FedWatch tool show that markets continued to see the Fed beginning interest rate cuts, a key moment for crypto and risk assets, in September and not earlier. A higher interest rate scenario reduces the opportunity cost of holding riskier assets like cryptocurrencies, a sentiment that has burdened Bitcoin prices in recent days. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.